So there's 5 lessons, 5 mindset shifts that have made all the difference for me to be able to live a life where I can make money work for me, where I have a skill set that I can take investments, put them into emerging markets and be able to grow those investments by finding the right companies in the right markets and entering at the right time. And I'm going to share with you those 5 mindset shifts today. Hopefully, you guys enjoy this little bit of a different video than normal. One of the things that I wish I knew earlier was the simple question of asking yourself before you buy an asset is, would you sell it? So this is number one. Such a valuable thing that has made all the difference for me to be patient before buying something, or be in a position where I'm going to be patient enough to hold on to this investment long enough before selling it. And this is something that I ask myself. I do the opposite. So imagine you're going to buy something and you're watching, let's say, a stock or a crypto go up in value. You're saying, oh, I might want to buy this. Before you just look at it and you say, oh, it's going up, or maybe you'll use some of the other strategies that I'm going to share in this video, but you're looking at something, and a lot of times people say, should I buy this? Should I buy this? Should I buy this? But one of the best things you can ask yourself is, would I sell this? And this is a good thing to look at, because now you're getting not just from your perspective, but you're getting in the mind of the institutions and the investors that are in the stock or the asset. So now you're looking at it and you're saying, would I sell this if I was them? And you look at it and you see it going down or something, or going up, and you're saying, I would probably sell right now. It looks like it's overextended, or it looks like a really good time to sell because it's gone up more than you would have expected just by looking at the chart or something. And then that can help you to not get into a trade with a bad entry. That's one thing. And then also, maybe it's going down and you look at it and you say, would I sell this? And you might look at it and say, yeah, it looks like there's no indication this is going to recover or that this is going to go up. So yeah, I'm going to sell this because I'm assuming, looking at now, it's going to continue down. And I don't want to hold on to this. Now, it's all theoretical. You're not actually holding on to it. You haven't even bought it yet. But you're in that position of saying, yeah, I wouldn't trade positions with somebody that was holding it right now, because that's what you're doing. It's called trading. You're switching positions. So that's the most important thing that I could share with you in the first lesson, is that ask yourself the opposite before you get into an investment or leave an investment. And if you're about to sell something, ask that question, would I buy this right now? And if the answer is yes, maybe you should hold it. Um, that's a good thing to look at. And then also, how does it make you feel holding it? If it just is too much in your gut, just sell it. Just get it out. It's better to have the peace of mind. But first, before getting to the peace of mind or the emotional side, I always look at it objectively, which is what brings us to number 2, which is stacking probabilities. So a lot of people, they go on my YouTube channel and sometimes they'll say, Will, you can't expect the technical analysis to be accurate. Or Will, how are you basing your investment only off of the financials? Or Will, how could you invest in something just because they recently had that news come out? Don't you see the chart, blah, blah, blah? But here's the deal. It's all probabilities, and it's stacking all of those things together. You can never rely solely on one indicator when making an investment. Does it help? Does sometimes you lean towards a certain indicator? Yeah. But when you're investing, the best thing that you can do is use all the things in your favor. And that's why we go over a 3-part analysis whenever we are investing in something. In order to stack things in your favor with the law of probabilities, you need to go over 3 things. The first thing is the market. So we look at the overall market. Is the market growing? Is it declining? Is there maybe some optimism around this market because there's going to be some stimulus or bills passed that will support this market economically? So we look at the market, and in that market analysis, there's 2 things we look at. The first thing we look at is the market growing or declining? And then the second thing we look at, and how you tell that is by looking at the revenue, looking at the interest of institutional investors. But the second thing we look at is this actually being used? You could look at trends, and one thing to validate a trend is Is it growing? Is it starting to trend up? But the second, really most overlooked, but one of the most important things when identifying a trend in any market is that actually being used? Is the product or this industry of product, is it actually being used? And that's what you have to ask yourself to do proper market analysis. So the second thing of stacking the probabilities in your favor is looking at the analysis. When looking at the analysis, there's three parts: A, B, and C. A is going to be looking at the chart. What do the technicals point to? That would include things like the RSI, the MACD. We're looking at the overall trend of support and resistance. And then we might look at some of the volume in that stock, how many people are trading it. And on top of that, we also like to look at the moving averages. So if something is at a moving average, it oftentimes will bounce or it will get rejected at that moving average. And then the last thing we look for in the technicals is the Fibonacci sequence. I like to look at the Fibonacci retracement and see if this Fibonacci retracement is indicating a buy or a sell. And I like to operate on the Fibonacci. There's even some really great studies that show that quantum computing is advancing faster when they use the Fibonacci retracement or Fibonacci sequence for some of their geometric shapes. And I think the Fibonacci is highly accurate, and that's what I found in my trading career when it comes to technicals. A is technical analysis. B is going to be the fundamentals. So that's where you can look at the news articles that are coming out. What new products are coming out? What are the anticipated reactions in the market from some of the new developments happening in the company? And those are things you look at that could be positive or negative as well. And then the third thing within analysis, which is C, is going to be the financials. So we're going to look at what their revenue looks like, what their earnings reports have looked like. Are they beating earnings? Are they showing that they're growing year over year? And when we get those things answered, we can build a better understanding of the overall analysis of the company. The third step in stacking probabilities in your favor is looking at the profit and the plan. Now, you want to realize that you're going to have to take risks to make money. That's true. But some people say things like scared money don't make money. I don't think that's true. And I think that one of the best ways to make money long term is to realize too, don't lose money. You got to minimize your risk, and it shouldn't be overlooked. And you don't want to YOLO your savings into something that's extremely volatile. And especially if you haven't gone over steps 1 and 2 of stacking your probabilities, knowing the market, going through the technicals, the fundamentals, and the financials. So you got to go through those things before planning your trade. Have an idea of how much you're willing to lose and how much you're willing to gain from that investment and what those numbers. Number 3, and one of the biggest mindset shifts that I've had, is that a lot of people say that you are your network, the people around you, that you become like the people that are most around you. And that can be true. You might have heard your net worth is your network, or your network is your net worth. But one thing I want you to realize, a lot of people, they find that their network might be the books that they read, and that's where they're getting their mentorship, or the videos that they watch, or things like that, where you're hanging out with them digitally. So that's one thing. And maybe the people that are around you in your immediate influence, they aren't like how you'd like to be. And so you have to keep that in mind. Like, I grew up in a household when I was growing up as a kid where I remember that my friends weren't doing the same things always. My parents weren't. They were working very traditional, exchanging their time for money in a lot of instances, and very, educational in traditional senses for how to earn money. And so in order to learn how to make money work for you or exchange value for money as opposed to time, then those are big mindset shifts that you have to go through. And sometimes that means that you'll reach those influences over the internet or through books. I think that it should be not the 5 people you spend the most time with, but the 5 people that you compare yourself with the most. And so you want to compare yourself with people, and those are the people that you will most likely become like. Now, this is number 4, and this is a realization that I actually had today. A lot of people realize that positive thinking is important in your investing, and there's a lot of questions as to what's more important. more positive thinking or less negative thinking. And this comes down to a few different things. Like, I want you to imagine inside of your mind, you have a fruit tree. You got two fruit trees, one in your mind over here and one in here. The fruit on this tree might be negative, and then the fruit on this tree might be positive. So let's say the negative fruit is your doubts, your worries, your fears, and things that are terrible, and the complaining, the pain is in this tree, the negative tree. And then also in your mind, you have a positive tree. And you have one that is more operating, the fruit there is expectancy. It is expecting good from an outcome, expecting positive outcomes, asking what would the best case scenario look like, and expecting growth and goodness and truth and the ability to grow as a person and what success looks like. And so that's not fear, that's excitement. That's not doubt, that's expectancy of positive outcomes. And that's not fear, that's that's courage, right? So I want you to imagine you have these two trees in your mind. And the thing is, these two trees are always in your mind. Just the things I gave you here, like sometimes I'll share something and someone say, Will, now I made this money because I learned this thing that you told me. And the reality is that skill and that opportunity, it was always there. You just didn't have the knowledge to get it, but it was always there. That opportunity was always there. You just had to learn how to take advantage of the opportunity. And you have the chance every single time you have a thought to pick which fruit you want. Which fruit do you want? And if you're holding a fruit from negative tree and you still can hold it without eating it. In other words, if you grab something that's like negative out of your mind, a negative thought, maybe it's a doubt, maybe it's a fear, something that your dream won't come true, or that you're gonna lose money in this investment or something like that. Instead, you grab that fruit, don't eat that fruit. Don't be like, oh yeah, that's how it is, and then allow that negative thought to win. No, grab that negative fruit, acknowledge that you hold it. Well, that's an interesting negative thought, then I'm going to put that fruit back. What does the positive outcome look like? What does the excitement rather than fear look like? What does the thing that I can expect that would be good from this investment? And there's not buts. It's not, I'm expecting this to happen. It could be really good, but this bad thing might happen. No, you won't even hear me say that in my analysis. A lot of times it's, this good thing could happen, and I would expect this good thing to happen. And it's possible that this negative thing could happen. See how I didn't say but? I didn't contradict or cancel out that positive expectancy. I acknowledged the negative, but I didn't cancel out the positive. And so that's something, choose the fruit. You can sometimes not even choose the negative fruit at all. You can look at it on the tree and say, yeah, no, I don't want that. But sometimes you grab the fruit and you have it right on your mouth, maybe even tasting a little bit, and you just gotta like acknowledge it, be like, that's a bad fruit. I need to grab some positive things. And that comes from watering the positive every day, whether it's, listening to podcasts, maybe you're watching our channel, maybe you're listening to inspirational people like Earl Nightingale or Jim Rohn, or maybe you're listening to some people like Naval who talk about freedom. One that I've really enjoyed listening to is Dan Martell. You could listen to people that have the things that you want, that you compare yourself to, right? The 5 people that you compare yourself to are who you're going to become most alike. Not necessarily who you hang out with, which it is a little contradictory to what most people say. That's the way that we see it. Okay, and just to review what we went through. Number 1, when you're looking at an investment to buy it, you say, would I sell this? And vice versa. If you're looking to sell this, would I buy this right now? Number 2, the stacking of probabilities. You want to go through full analysis and stack all the probabilities to really get a full picture of an investment, from the market that you're in, the analysts of the market, to the analysis, and then to the plan and what the profit and risk look like. Number 3, we have compare. The people around you you're going to become the people that you compare yourself. 4 is choose the fruits. You got 2 fruit trees in your mind. One's negative, one's positive. They both got fruit, and you get to choose which one you want to pick out of. Okay? Number 5, which is the most valuable here is direction is the same as emotion when investing. So when looking at a chart, direction, the which way it goes, the direction is the same as your emotion. You can't predict it. You can only plan for it. So the direction when I get into any trade, I can't predict it. I don't know that it's going to go up or down. Do I stack my probabilities? Yes. Do I ask psychological questions to put myself in the mind of the rest of the market? Yes. Do I surround myself with the right people and have the right mindset of expecting positive outcome and then being in a position to handle if anything goes negative because I have a plan? I went through that process. Yes. But when I get into a trade, I cannot control the direction of that trade, of that investment. I cannot control the investment or unless I have actual influence on the company itself. But in most cases, you can't control the direction. And that makes you think of some like big players, right, in the markets. That's interesting. You can't control the direction. There's things you can do. You can also not give your stop loss out. I don't do that. That's for another video. But anyway, you can't predict the direction, just like you can't predict what your emotions will be, but you can have a plan. And that's where the plan will be something that you can adjust and execute, even if your emotions are going a certain direction, or even if the stock is going a certain direction, you have a plan to execute with whatever happens. So you don't have, you actually, by having a plan, you'll have less emotions and you won't worry about it as much. And that's something that's been one of the big 5 mindset shifts. So hopefully you guys enjoyed. Those are the 5 mindset shifts that have made a massive difference in my trading and investing journey. And hopefully you guys got some value out of this video. And leave a comment down below what mindset shifts have been the most game-changing for you. I would like to hear them, and I'm sure that they'd be very valuable for other subscribers here on the channel. If you haven't subscribed, make sure to hit that, smash that like button, and hit the subscription button for here on YouTube. And if you guys would like to watch live trading sessions and see my entries and exits every day at market open Monday through Friday, I would encourage you to check out Stockmate. It's that second link down below. And we will be there at market open 6:30 a.m. Pacific time tomorrow. If you want to join us, we got a sale going on and it's getting pretty good there. Second link in the description. Thank you guys so much for watching. I appreciate you all. I'll see you in the next video. Take care.